XRP just recorded its worst daily drop since April, falling over 10% in a single day. According to data from TradingView, this decline puts XRP dangerously close to the $3 support level. So what happened? And should investors be worried about what comes next? Let's get right into the key points. On July 23rd, XRP dropped by 10.34%, almost matching its sharp fall on April 3rd when it lost 10.39% in one day. Back in April, that fall was triggered by the announcement of sweeping U.S. tariffs, which hit crypto and other risk assets hard. Now, in July, a different player is driving the market turbulence: South Korean traders, especially on Upbit. According to a report from U.Today, South Korea's top exchange, Upbit, was behind a large part of this recent sell-off. More than 75 million XRP tokens were sold in a single day on the platform. This sudden selling pressure sent shockwaves through the market. And remember, it was these same South Korean traders who were largely responsible for the big XRP rally just weeks ago. The impact of this sell-off was visible beyond price action. Data from CoinGlass revealed that nearly $90 million worth of XRP long positions were liquidated in the last 24 hours alone. That's a significant amount, and it shows that many traders betting on XRP to rise were caught off guard. Now, here's why this is important. XRP came very close to breaking below $3. On Bitstamp, it touched a low near $3 but found some buying interest just in time. As of now, it's trading at $3.09, still under pressure and down another 3% from the previous day. To give some context, XRP is now the fifth worst performer among the top 100 cryptocurrencies on CoinGecko. The only tokens doing worse right now are Celestia, TIA, Floki, WorldCoin, WLD, and Aptos, APT. That's not exactly the kind of company investors want XRP to be in. So what does this tell us? First, it's a reminder of how quickly sentiment can change in crypto. Just a few weeks ago, XRP was riding a wave of optimism. There was excitement around the possibility of new ETF applications, legal clarity after the SEC ruling, and growing interest from retail and institutional players. That optimism drove XRP above the $3 mark, a major psychological and technical level. But crypto markets are often driven by momentum. When prices fall quickly, especially after a strong rally, panic selling can make things worse. That's what we're seeing now. Second, the role of Upbit highlights how concentrated influence from one region or exchange can cause major ripple effects, no pun intended, in global markets. South Korean trading volume is extremely high, and when large holders start selling, it can trigger chain reactions that impact prices everywhere. However, it's not all doom and gloom. Despite the sharp drop, XRP hasn't lost the $3 level, at least not yet. The fact that buyers stepped in around this mark shows that there's still strong interest in defending that support. If XRP can hold above $3 and stabilize, this correction may end up being a healthy pullback after a big run-up. But if it breaks decisively below $3, we could be in for a deeper correction. So, what should we take away from this? This moment is a test for XRP, not just in terms of price, but in terms of confidence. With the token still up significantly over the past months, some correction is expected. But whether it turns into a longer downtrend depends on several factors: market sentiment, trading activity from key exchanges like Upbit, and how the broader crypto market behaves. In the end, XRP is in a fragile position. It's holding onto a critical support level, but the pressure is real. The next few days could determine whether this is just a temporary shakeout or the start of a bigger decline. Stay tuned, because the $3 line might not hold for long.